Well, good morning or good afternoon, depending on what part of the country you are calling in from. I want to welcome you to the Finance of America Wholesale Mortgage 2X Flex product training. My name is Ginger Bell, and I will be discussing today the calculation methods of the 2X Flex. I have two experts on the call with me today. I have Kyle Flynn, who's the National Wholesale Ops Specialist, and I have Mindy Perlmutter, who is the Product Development Manager for Finance of America. And so they will help me through questions that we have. Also, to let you know, guidelines are available on the Platinum site, and the worksheet we're going to be going through is also available on the Platinum site under Programs and Guidelines. And if you're looking for information as far as pricing this out, it is on page 7 of your rate sheet. It's also available in Optimal Blue. You want to make sure if you are pricing it out through Optimal Blue that you are selecting self-employed. So a couple of important things to remember. We do have handouts for today. I'm going to post them into your chat box here. And so we have also a couple of great webinar flyers that are available from this webinar that you can go and personalize. One is available in a Word document. The other is available in Publisher. So if you don't have Publisher, you can grab the Word document. Those marketing flyers are up there. And I've also provided links to the slide deck that we did previously that was an overview of this program. We're not doing an overview in this webinar. We're actually getting into what statements to use and how to calculate income. So we're really getting into the nuts and bolts of it. But if you want to listen to a recording of the previous webinar we did, I'm putting that up there. And then I'm also sending all of the links as well as a recording to this session in a follow-up email that will come out tomorrow. And it will also be available, the training and the flyers are available in FAMU. If you are not registered on FAM University, then you can check with your FAM AE for information on how to access that material. And then I also want to remind everyone, we have a webinar coming up tomorrow, which is on renovation lending, titled, "Oh No, I Got a Reno Deal." So get registered for that, and you can register for all of our events at famuevents.com. My name is Ginger Bell. I'm going to be going through the information with you today. And as I said, I have two experts on the line with me, Kyle and Mindy, and they're going to help to answer questions. So let's get started. Beginning with, what is 2X Flex? So it's a new program that is available through Finance of America Wholesale, and it allows your self-employed borrowers, those who own greater than 25% of a business, to be able to use their bank statements in order to qualify for a loan through this program. So you can use either 12 months or 24 months bank statements. We'll talk about what the difference is. And they can also use personal or business bank statements. So pretty big deal there. How can 2X Flex help your borrowers? Well, we know there's a lot of self-employed borrowers out there. And so what this program allows you is to be able to offer them a program where no tax returns are required. You're going to be able to qualify with co-borrower income as well. So not just the self-employed borrower, but also co-borrower income. So you can have both self-employed and W-2. And they can own multiple businesses, which we know in today's world that a lot of people do own multiple businesses. So it allows you to do that. Under the tax returns, 2Flex could be the solution if you have borrowers who don't show enough income to qualify after write-offs, but still show that they make enough money to pay their mortgage. So now they can use the deposits to be able to qualify for the mortgage. Your borrower may be a two-income household, and so the 2X Flex allows a self-employed borrower to qualify using their bank statements, and then the wage earner to qualify if they are a salaried co-borrower. So this is a great option to be able to blend the two together. It's also great for your borrowers who maybe own more than one business. And with the internet being as viable as it is to be able to start businesses, there are lots of people out there who own more than one business. So, under the 2X Flex, there are 3 different credit classes. And so this is important to remember, especially as we're going through the income qualification. There is an elite class, which is your well-qualified borrowers. There is a VIP class, which are borrowers who have good credit but perhaps some delinquencies. And then there is the insider credit class. And this is for those who have okay credit with maybe a recent credit event. There are different parameters as far as qualification for each of these credit classes. And I'm not going to go through all of these. You can access the slide deck, take a look at those, go through the guidelines, but it is what you want to pay attention to because it'll have an effect on LTV and things as far as rate, all the things that normally we have. So remember to always look at the credit class as well. So some of the guidelines that you're seeing are important to pay attention to with things like non-sufficient funds. And I'm going to go through that and I'll detail the how-tos of the program on this. So a lot of things to look at as far as the different credit classes. The great thing is we have several worksheets to help you through the process. So let's move on to the bank statement documentation requirements. So the type of income calculation chosen will determine the required documentation. But you will always need either 12 or 24 months bank statements, and that ties to your different credit classes. And you'll also need documentation to show business ownership as well as the standard documentation you use for a business owner under a verbal VOE. And so as you're going through the process, the income documentation for the bank statements must be the most recent consecutive 12 or 24 months. And so you want to look at that based on either your application date or your funding date. And so that's what you're going to base the income documentation, the bank statements you need off of that. The bank statements must include the account holder name and address, the beginning, ending, and average balance, the institution name, the account number. The truncated account number is permitted, however, and then also the statement period. Ineligible documentation is a VOD, transaction history, or third-party verification. So you need to have those bank statements in order to be able to qualify. So let's determine what bank statements will be used with each of your calculation method. And I'm going to look at both of these. So we're going to start with your personal bank statements. So your borrower has only a personal account, then you're going to use the personal bank statement deposits, but you'll calculate based on the business bank statement method. That's one way. Or if the borrower has personal accounts and a business account, then you'll continue with the calculation based on the personal bank statement method. And we're going to discuss the different calculations a little later on. So when using bank statements, you can choose one of 3 calculation methods. And you can use the fixed expense ratio, the third-party business expense summary, or the borrower prepared P&L, profit and loss. And so looking at each of these, you'll determine the type of bank statement. So you'll have either business bank statements or combined business and personal. And the bank statements, the business bank statements are required. As we stated earlier, we have allowed on this program up to 3 businesses. So if they own more than 3, they can only use 3 businesses. So you want to take the businesses that are making the most money. Business bank statements are required, and the same calculation method must be used for all businesses. So you cannot use one calculation method for one type of business and another calculation for another type of business. So they can own 3 different businesses, no more than 3, and the calculation method must be used the same for all of them. So multiple bank accounts for the same business and multiple businesses using a personal bank statement may be considered on a case-by-case basis. And so what you want to do if you are getting, first of all, if you have a borrower that you're looking at for this program, call your Finance of America account executive because they're going to be able to help you through the process. So let's get into analyzing your bank statements. And we'll start by talking about if you have a borrower who has large deposits. And large deposits are considered greater than 50% of their monthly income. So if large deposits are present, a letter of explanation is required and it must be consistent with their business profile. If it's inconsistent, it must be deducted from deposits and not included in the income. The second is declining income. So if you see a trend of 3 months of declining income that's greater than 25%, then 24 months bank statements, then we're going to need the if it's a declining income greater than 25%, then we're going to need 24 months of bank statements and a letter of explanation. And then third is joint accounts. So joint accounts are with a non-borrowing account owner. These are permitted. The non-borrowing account owner must acknowledge the transaction and confirm that the borrower has access to the funds. So if the funds are used in the transaction, they must be deducted from the deposits when calculating the income. Next, we'll talk about transfers, and this happens a lot for individuals who own business accounts, that they're transferring money. So here we're going to break down all the options of your account transfers. So generally, transfers from bank accounts are not permitted, with one exception. If the business account is to the personal account and it's what considered borrower's income or wages, then it is permitted. So if it's from a personal account to a personal account, deposit not permitted. Personal account to a business account, that deposit is not permitted. But if you have a business account and they're depositing money into their personal account, it's permitted only when the borrower receives it as income. And then finally, business account to business account is not permitted. It's important to also note that wire transfers into business accounts must be documented or else they are excluded. So let's talk about NSFs, or non-sufficient funds. So the guidelines are separated by the credit classes. And remember, we talked about the credit classes earlier. So we have our elite, and they are considered elite if they have 0 events of an NSF. They would be considered a VIP if there is 1 NSF event. And they would be considered a credit class of insider if there are 2 NSF events. So let's look at what that actually looks like. So in this example, the borrower had 2 NSF events as more than 5 business days occurred from the first overdraft on October 27th and the last overdraft on November 14th. So an event is defined as greater than or equal to 1 transaction occurring within 5 business days. So in this case, the NSF events equals 2 because it's been more than 5 business days that occurred between October 27th and November 14th. The next example, let's say someone writes your borrower a check and the check gets returned for insufficient funds. It is not considered NSF as long as that returned check didn't cause any overdrafts. So you want to make sure the borrower has a positive balance prior to deposit and after deposit amount, and the fee is deducted. So, important to remember to look at that. Just because they have an NSF check does not necessarily mean that that is an event. So as you're going through their statements, you want to look at, did that actually cause an event, and then watch the timelines as far as those events. Because if it's the 5-day period, then you may have more than one event. And again, going through this, the best thing to do is to just get the statements, call your Finance of America account executive, and they can help you go through the process. Let's talk about ineligible deposits. These include cash advances from credit cards, income sources that are already taken into account, tax refunds, gift funds, product returns and credits, and credit line deposits or business financing. So those would be considered ineligible deposits, and those would be excluded on the income calculation worksheet. So now we're going to move on to the documentation that's needed for your business calculation method. And we said there's 3 business bank statement type calculations. So let's look at what documentation is needed for each of them. So the first documentation method is the fixed expense ratio. And when you have a borrower that qualifies for the fixed expense ratio, then no additional documentation is needed. Under the third-party expense summary calculation method, a third-party written paragraph signed and dated on company letterhead stating the following is required: business name, business owner and the percentage of ownership, length of business ownership, look-back period of 12 or 24 months based on the number of months that bank statements have been provided, and an expense-to-income ratio. The third type of documentation calculation is the borrower-prepared P&L, or profit and loss. So this is a 12-month P&L summarizing revenue, costs, and expenses that have been incurred during the most recent same 12-month period of bank statements. And third-party P&Ls are permitted. Now here is an example of an expense summary. You can see it includes all the required items: the business name, the business owner, the percentage of ownership, the length of business ownership, the look-back period of 12 or 24 months based on the number of months of bank statements that have been provided, and the expense-to-income ratio. So that's what an expense summary would look like. So now let's get into actually calculating the income. And now that we have covered the different bank statements and the documentation required, let's look at how we calculate the income. There is a specific income calculation worksheet that is available on the Platinum site under Programs and Guidelines. This worksheet includes 9 tabs. 1 is for personal bank statements, 3 businesses, 1 excluded deposits for each bank statement, and a payment shock residual income tab. The top half of the calculator is the same for both business and personal. Besides the borrower's name, loan number, and account name and number, you need to enter the business ownership, the LTV, their FICO score, and select the credit class and number of months of bank statements, with the minimum being 12 months. This information will be used in validations throughout the worksheet, as well as calculating income. And remember, business ownership must be documented by a CPA letter, operating statement, or equivalent. So, best practice is, as soon as you're done with this webinar, if you don't know how to access Platinum site, then contact your FAM account executive, find out how to do that, get on to the Programs and Guidelines, and then download this worksheet. and take a look at where the information is. And especially if you have a particular borrower who you think this program would be good for, you want to get familiar. And I don't want to scare anyone off, because sometimes when you look at this, it's like, Ginger, this is a lot of work. I don't want to go through this. It's really not difficult, and that's why we have the worksheet, to make it very simple for you. But the first thing you want to do is get familiar with this worksheet and then get their bank statements. And so make sure you're getting those. Also, just a reminder, do not receive bank statements via email. Make sure you're using a secure way to be able to have them upload those. That's just Ginger's little piece of advice for the day. The income is calculated on the lower of income from 2X Flex income calculation worksheet or your initial 1003. Now, if you're getting it off of your initial 1003 and you haven't used the income worksheet yet, then it may not match up, and especially if you're going off of what they're telling you when you take the initial 1003, because you want to make sure you get those statements, go through those, put the information in. It doesn't take long. It's really just putting in, just 12 months worth of deposits and going through that. So it's important to be able to look at those deposits and when you're going through that. Let's look at the bank statement deposits. And remember, we have our 3 different categories. Your elite, and that's if there's 0 NSFs in each 12 months. Your VIP, if there's 1 NSF event in each 12 months. Or your insider, that has 2 NSF events in each 12 months. Bank statements 1 through 12 are the most recent year, and 13 to 24 are then the second year. The total deposits will get entered, and then enter any deposits from the ineligible deposit list that must be excluded. So account for all the deposits, both included and excluded. The reason should also be added as far as why they are excluded. The net monthly deposits will automatically calculate for you. So it's set up to where all the algorithms are in there. You don't need to worry about that. You just need to put in the numbers. Also, the number of NSF events must be entered, so you can see where that goes. Based on the credit class and the number of events, you will receive a pass or a fail. If the loan receives a fail, you may be able to download the credit class to make it work. So again, work with your account manager, your FAM account manager, and they can help you through the process. Next, each calculation worksheet has a separate sheet to list all the excluded deposits and reasons. This helps anyone who looks at the file to know what deposits were used and why. The statement date will automatically populate from the calculation worksheet, and the total of excluded deposits will populate back to the calculation worksheet. So you'll see here that that date is automatically populates straight up there, and then the total pulls to the calculation worksheet. So you don't have to worry about going back and forth for anything. It'll automatically do that for you. 3 months of trending declining income will give you a warning, and the underwriter must still review the file for declining income even if the warning does not appear. If the income is declining, then 24 months bank statements is required, as well as a letter of explanation. So, maybe somebody was ill, or they started a new business, or they were out of the country, or they were serving, or whatever that is. You want to make sure and provide that, because we will look for that 3-month trend of declining income that's greater than 25%. You will get a warning. The underwriter is going to also analyze for any inconsistent cash flows or any large fluctuations. If any of those happen, then 24 months bank statements and a letter of explanation will be required. The declining income warning looks at months 1 through 12 over months 13 to 24. If month 1 through 12 are less than 13 to 24 months, a warning will appear. And excuse me, the warning will tell you income must be calculated using the most recent 12 months bank statement. So this is all built in the worksheet. That's what's really great about this. So it's why I recommend go and grab the worksheet. That way you have access to it, get familiar with it, and that way you know as you're going through this what is required and what to look for. So now that we have the bank statements and the documentation that's required for the calculation methods, let's look at how we actually calculate the income. And we're going to start with the calculation for personal bank statements. 100% of the eligible deposits you can use over 12 or 24 months for personal bank statements. And remember, if the borrower has both personal and business bank statements, 12 to 24 months of consecutive personal bank statements are required, and an additional 3 months of business bank statements to document the separate account. And if you have those, then we will use 100% of eligible deposits as qualifying income based on either the 12 or the 24-month bank statement. So maybe you have someone started a business, didn't do what they needed to do as far as getting a business bank statement. They were running everything through their personal bank statements. And again, that happens. Sometimes people start business, and we see that especially with a lot of these internet businesses that are going on. And then they get going and they decide, oh, I'm going to open up a business bank account. So then they do that. But you need to have 3 months of business bank statements if you're going to use both personal and business. So let's look at the calculator, and it's a built-in calculator into the worksheet. The 3 months business bank statements requirement is built into the calculator as a reminder. The fail reminds you to use the business calculation method. If this is the case, proceed to Business 1 tab and enter your deposits. Your personal bank statement calculation will take the average monthly income based on the number of months bank statements you selected from the top of the calculator. The lower of the average income figure calculation, or the income reported on the initial 1003, will be used to qualify. That's off of your personal bank statement. So now let's go on and let's look at your business bank statements and the calculation methods that we can use for business bank statements. We talked about 3. So there's 3 ways to calculate income from your business bank statements. The first is your fixed expense ratio. 50% of the fixed expense ratio. And they must meet the following requirements: a 680 minimum FICO and 80% maximum LTV. With that, then your net income is your total deposits times 0.50. So the fixed expense ratio allows you to use 50% fixed expense income, but they must meet those requirements. Your second is your third-party expense summary. So for your net income, it's the total deposits times your expense summary page. The third is the borrower prepared P&L. And there are a couple of steps here. First, you're going to look at the gross revenue from the P&L and make sure it is within 10% variance from the total bank statement deposits. Then you will look at the lower of the 2 net income calculations based on the P&L gross income and the annual average total deposits. Let's look at an example. We're going to go through an example because I've covered quite a few things here, and hopefully your eyeballs are not crossing. And it's one of those things, again, once you get into the worksheet, it will make a lot more sense. As you have questions, contact your Finance of America AE. They can help you through the process. But let's look at the business bank statements. And these are the total deposits. And so when you enter those in, the total deposits will calculate the monthly income based on the number of bank statements. The expense ratio and the business ownership still needs to be taken into the calculation. You need to select the calculation method from the drop-down. So this is going to show up in the worksheet, and you're going to select which of the calculation methods that you're using. When the calculation method is selected, only that calculation is compared to income reported on the 1003 to determine the net monthly qualifying income. And this is under the P&L method. So you want to take notice the other calculation methods will show as NA, or not eligible, if they are not selected in the dropdown. Okay, next, the fixed expense ratio. They must meet the LTV and the FICO requirements. Reminder is a minimum 680 FICO and 80% maximum LTV. When you have this, you will receive a pass validation if this is met. If that happens, there's nothing else that needs to be completed to calculate this income. The total deposits will be pulled from the top half of the worksheet minus 50% expense ratio, and percentage of ownership will give you the net income owned. Now the final step is to take the new income owned and divide it by the number of months of bank statements. For this example, it is 24 months. This will give you your net monthly income. All information is needed for this calculation to be automatically populated. So next, let's look at the expense summary. This is a third-party letter. The only information that needs to be entered is the expense ratio from the expense summary. Here you'll notice the fixed expense ratio is NA, as that is not the method that is selected. The total deposits will be pulled from the top half of the worksheet minus 30% expense ratio, and percentage of ownership will give you the net income owned. The final step is to take the new income owned and divide the number of months of bank statements. For this example, we have 24 months. This will give you your expense summary net monthly income. So following these steps will give you your calculation for your expense summary method. The third calculation method is the borrower prepared P&L. A validation will calculate to ensure the gross income is with 10% plus or minus of the total deposits. If you pass, then this calculation method is an option for you. If you receive a fail, this calculation method is not available to your borrower. You'll want to begin by entering all the figures from the P&L. The wages paid to the borrower can be added back, so it is listed here as a negative and subtracted from expenses. And again, this is an automatic calculation. The gross income minus total expenses give net income, and then it's based on the percentage of ownership, and this will give you the net income owned. The final step is to take the new income owned and divide it by 12 months. You will also use 12 months for the P&L option. So if you get a fail on this, you're not permitted to use his income calculation. Otherwise, make sure and watch things like wages and salaries. You can add those back in. So for your P&L, you'll want to enter all the figures from the P&L. Wages paid to the borrower are permitted, as I said, to be added back. So it's listed here as a negative and subtracted from the expenses. And again, this is an automatic calculation. And your gross income minus the total expenses gives the net income then based on the percentage of ownership. And remember, if more than one business, the same calculation is required for each business. So if you're using the P&L method, then a P&L method must be used for each business that they are using for the calculation method. Step 2 of the P&L method is taking the total deposits divided by the number of months of bank statements used and then multiply by 12 to get the annual average total deposits. So this example is $260,000 for our total deposits divided by 24 and multiplied by 12. And so that's going to get the annual amount. And the income calculation is based on the number of months bank statements that's selected at the top of the worksheet. The $130,000 then will populate in total deposits annual minus the total expense from the P&L. And then the percentage of ownership will be calculated to give you the net income owned, and the number of months on the P&L method is always 12. So after both of these steps, the method is calculated and you will use the lesser of the two. The number will automatically populate on the bottom, comparing it to the income reported from the 1003. Remember, only the method selected in the drop-down will pull the summary. So whatever method you're using, that is what you'll get on the qualifying monthly income summary. The selected method will be compared to the income that's reported on the 1003, and the lower figure will be used as the net monthly qualifying income. So let me repeat that because it's important to remember when you're taking that application to think about what you're putting down there for your net qualifying income. So I'd really recommend going through this worksheet first, getting the business bank statements, determining which method you're going to use for qualifying the income. If it's the fixed expense ratio, if it's the expense summary, or if it's the P&L. Because the selected method will be compared to the income reported on the 1003, and the lower figure will be used as the net monthly qualifying income. So let's look at have a borrower that owns multiple businesses. You're going to go through and you're going to do the same thing on Business 2 and Business 3 tabs. So it's on the worksheet, so you don't have to fill out a separate worksheet for each one. You're actually going to go through the process for Business 1, Business 2, Business 3, and then you'll also see there's the tab if they have personal, and then if they have residual income. And so these are all of the different qualifications that you're going to use. The great thing is everything is available and it's all on the worksheet. So if you are looking to be able to get started in something like this, then the first thing you want to do is to go grab the worksheet. It's available on the Platinum site under Programs and Guidelines, and then talk to your borrower, find out what kind of statements they have, personal or business. If they have personal, if it's only personal, if they have personal and business, you're going to need at least 3 months worth of their business bank statements. And then under their business bank statements, Have that conversation as far as any NSFs and then any other businesses that they own and how long they've owned it. So it's a little more in-depth conversation that you're having with someone that is a business owner. The great thing is this gives us an option for those borrowers that we may not have had that option at before. So I am going to move on to any questions. And I know I saw one question up there, and it looks like it was answered. And Mindy, I'm going to throw that one over to you, if that's okay, if you want to unmute yourself.
Sure. So you cannot use both business and personal accounts to qualify.
Okay, so the question was, can deposits from business and personal be combined to calculate income? And in this example, business bank statements show average eligible deposits of $20,000 per month. The borrower distributes $5,000 per month to their personal account. Could the $5,000 be deducted from the $20,000? Then the expense ratio applied to the remaining $15,000, and the borrower also gets credit for 100% of the $5,000 that goes into personal. And really, they can do that method under the P&L to where that goes back in, right?
The P&L method is to use the expenses.
Right.
So it's either your fixed expense ratio, the expenses from the P&L, or you have your expense summary.
Right. Yeah, so in something like that, they're getting paid the $5,000 that's going into their personal account. So if you want to use that as income, then they would need to use the P&L method so that that would be added back in and not taken out as an expense.
And it would need to show as income.
Exactly. So they would need to show that as income. Very good. Okay, other questions? Does the P&L have to be audited?
No, it does not need to be audited. It can be a borrower-prepared P&L.
Okay. So what kind of details obviously are required on the P&L that the underwriter is going to be looking at?
So the underwriters are going to look at all the expenses. They're going to look at the total gross income minus all the expenses. They're going to take that total gross income and compare it to the deposits for that year or 2 years that corresponds with the P&L.
Okay, very good. And I'm not seeing any other questions. If you do have any other questions, type those in there and let me know what those questions are. And if not, then you can always contact your Finance of America account executive and check with them as you go through the process. And so this is a reminder as we're going through this information that this is the 2X Flex program. You can find information on page 7 of the rate sheet, and you can also find guidelines under the Platinum site. Look at products and guidelines. And if you have additional questions, contact your Finance of America account executive. And I do have another question in. Mindy from Noreen is asking, what if the borrower is a DACA, a DACA? And I don't know what that is. I'm hoping you do.
You will need to refer to the visa classification policy regarding requirements.
Okay, so that's someone as far as that has a visa to work here?
You'll have to refer to the visa classification policy
Gotcha.
of FAMS.
Okay, very good. Good. Okay, I'm not seeing any other questions, which is fabulous. So it sounds like you all have this under control, and now you can go out and market it. So I'm going to send out follow-up emails tomorrow. Grab those flyers that we have available to you and get those out to your partners, out to your database, and then you can go from there. I do have one question coming in. Ginny's asking, do you allow subordinating seconds?
You'll have to meet the CLTV guidelines for the product.
Okay,
If you're
so
coordinating a second.
gotcha. So look at what the guidelines are and see if you meet those qualifications as well. Okay,
Yep.
good. Well, I am not seeing any of the questions. So Kyle had to drop off the call, but Mindy, thank you so much. And for those of you who are on the webinar, thanks so much. And we look forward to seeing you. Hop on the call tomorrow. We have a great webinar coming up talking about renovation loans. And I will see you all soon. Thanks so much. Thanks, Mindy.
Thanks, Ginger. Bye-bye.